Hey everyone, this week I want to circle back to the federal fiscal stimulus and highlight why the second stimulus was great, but a timely third stimulus is even more important to the economy and commercial real estate. When the $2.2 trillion CARES Act was passed last year in March, it was really designed to build a bridge for the economy that extended through the summer. At the time, no one really knew how long the pandemic would last, so the stimulus was designed to reinforce the economy for about 4 to 6 months. Looking back, we have to remember the steep declines that happened in the second quarter of 2020. 22 million jobs lost and weekly unemployment claims reaching 6.8 million in a single week at the end of March. A $52 billion drop in core retail sales, a 14% single month decline. The list goes on, but the point is that the CARES Act was a critical safety net at the time, and it did deliver an economic bounce in the third quarter. Job losses were stemmed, with weekly unemployment claims tapering down to the low 700,000 range, and about 12 million jobs were recovered as businesses began to reopen in May and June. Core retail sales bounced and actually climbed to a new record by the end of September. And small business sentiment, which had been down by 13%, almost fully recovered. But that stimulus-induced bounce also gave many a false sense of confidence in the economic strength, and that, together with election year politics, stalled momentum on a second round of stimulus. Around September, the pendulum began to swing back toward the downside. Weekly unemployment claims pushed back up, reaching the 900,000 range. Retail sales began to fall again, and small business sentiment has declined by nearly 8%. So the loss of momentum became quite visible in the fourth quarter, and a second round of stimulus was finally passed at the end of December. The first round carried the economy for about 6 months, but this new $900 billion round is about 60% less than the first round of stimulus. So it will likely just stabilize the economy, and only for a couple months. That's why a third stimulus round will be so important. It's likely the vaccine will not hit a critical mass until the third or fourth quarter, and the stimulus bridge needs to carry us that far. That means we could see a relapse of economic weakening in the second quarter if a third round of stimulus isn't delivered soon. What's all this mean for commercial real estate? The trends move more slowly in our business, but they still generally correlate to the broader economy, especially apartments and retail. Apartment absorption was soft in the second quarter. Then in third quarter, when the stimulus was fully in the market, absorption surged. But as the stimulus ran out, leasing activity began to taper again. We also have to consider that eviction moratoriums are distorting the numbers a little bit, and that's going to carry with us for a while. Retail space absorption hit a trough in the third quarter last year before delivering a very modest gain at the end of the year, but the outlook remains tepid and fragmented both geographically and by property type in the retail segment. Office absorption has been the softest, and at about 155 million square feet coming back into the market in the last 3 quarters. Industrial demand is the exception to the trend. Absorption's been gaining steadily, and that's largely driven by e-commerce. So as I wrap up, I want to reiterate my main point. The second round of stimulus was late, so we saw the economy soften. It was also too small. Investors will need to monitor the progress of a third round of stimulus as a key indicator going forward. If a third round of stimulus is passed, that's good for real estate. If a third round is stalled, then we can expect the economy to soften and real estate with it. Although I dug into a lot of details here, don't get lost in the weeds. Investors need to look beyond 2021 and focus beyond the immediate cycle. The long-term strength of real estate remains exceptionally positive. That's why real estate investors need to keep their eyes on the horizon.